Hey everyone, welcome to Flywheelpod, your number one source for everything Frax, DeFi, and everything in between. If you want to know what's going on in the world on-chain, you've come to the right place. This is DeFi Dave, here with capital K, and we're here to help you harness the power of the flywheel. And this time around, I think we hit different parts of the flywheel, not just on the application, stablecoin part that we usually talk about, but especially on the validator portion of the flywheel, like the real consensus layer of the flywheel. We had NPC Christian on, who works at CoinFund. He's been in crypto for 5 years, and I believe he's just right out of college. He's part of the Zoomer generation, and he's anything but an NPC. So, Kiet, what do you think of this episode?
I felt like we went deep, man. I like this one a lot. Like I learned a ton just sitting there and kind of soaking in what he was saying. My favorite part though was at the end about the digital Phoenician. Like add a little philosophy for us to think about too. That was cool. Yeah,
we gotta add the links to all the articles we talked about here because Christian is he's a very active writer on Mirror, and he writes these phenomenal blog posts of all different types, all different ranges, like some covering governance, some covering validators, some covering culture, such range. And so I'm just and whenever it's funny, I've known Christian for almost a year, and whenever I go to a conference, he's usually there. And so we always have these super deep conversations. I always learn so much from them. I'm I need to have this guy on a podcast. I need to bring him on so we can show the world the conversations we have.
No, I'm glad you did, man. He was a great guest, and I couldn't even tell this was his first pod. He crushed it.
I know, he just went off. This is a real listening treat, honestly, and I think our viewers are definitely going to enjoy how deep we go. And these are conversations that you're not going to find on Twitter, on social media. We actually go into what matters here. And so on that note, we'll get this started. But before we start, make sure you hit that bell button and subscribe. We have finally hit 1,000 subscribers. Let's fucking go.
Come again.
Yeah, we did it. 1,000 subscribers in 4 months. Honestly, this is the 21st episode. So honestly, thank you for all the viewers, all the support. We've grown so fast, even in a bear market. So damn, you guys are around. You guys are real ones. So thank you. If you're new here, let's get to 10K. Hit that subscribe button. Don't forget to follow us on Twitter at Flywheelpod. Don't forget to follow us on, join our Telegram group at Flywheelpod. You can follow me on Twitter at DeFi Dave 22.
You can follow me at 0x_K.
And let's get the flywheel spinning. Welcome back, everyone, to Flywheelpod. On this edition, we have an NPC on, NPC Christian, someone walking amongst us, but he's more than an NPC in my opinion. Christian, how you doing?
I'm good, Dave. Thanks for having me on. As a viewer of Flywheel, it's a big honor.
Well, as a reader of all the quantum articles, it is an honor to have you on.
Feeling great.
Yeah. So, but what we were talking about before we went live was Devcon because we were both there. We saw what went down there. We saw, what people were talking about, what people were getting excited about, what could be bubbling up under the surface that could be narratives for next cycle. So what was your overall thoughts about Devcon, and what did you see there?
Yeah, Devcon was great. I mean, this is one of the best gatherings of people I think we've had in years, right? It was just amazing. And we're kind of in that nice, sweet spot where everything that's happening is really exciting. But we're not in a raging bull, and that's not really our fault, right? The economy is kind of just not doing great across the board. So people are working on really cool stuff, but there was a little bit less of that grifter 2021 type of stuff going on. So no bear market despair, no bull market grift, right in the middle. And the big thing, right? ZK Tech. It's like the new Cold War, right? You've got the ZK Sync team and the Polygon team duking it out for top dog status with the ZK UVM. But then there's a bunch of other teams trying to catch up there.
Don't forget Scroll. Scroll is the dark horse.
Right. Yeah, Scroll, Aztec, Starkware, right, are all kind of doing stuff too. A little bit less focused on the EVM. I thought Aztec and the announcement of Noir, which came a little bit before Devcon, was pretty interesting too, in the sense that it lets you do ZK programming without knowing cryptography to the same extent. So there's a lot of cool stuff coming on that side, but it really does feel like at its core, it's a cold war between ZK Sync and Polygon. They're keeping up with each other, I think, in ways that maybe they didn't anticipate. Like, there's just no winner yet, right? Like, Polygon's code base is open source. ZK Sync's beta is coming soon. So there's a lot of interesting stuff there. I don't think the app layer has like dreamed up enough really innovative stuff yet, but we'll get there. And I think the easier it is to like write circuits with like Circon or Noir, the Aztec language, the more interesting use cases we'll see.
So you don't have a particular horse yet that like, oh, this is the definite winner of the ZK wars. Like, we're still in the middle of the race.
Oh, absolutely. I mean, the thing is, like, it seems like I think I heard about Polygon in particular, like their incentivized testnet, like beta testnet, it's going to last like 6 months to a year. So that said, like, I don't think 2023 is the year where we decide like this is the winner. In the sense, even with optimistic rollups, like we still don't really know who the winner is. It seems like it's Arbitrum, but that's not over yet, right? Like people are still using Optimism and other rollup solutions. So yeah, I don't think it'll be a while before we can really declare a winner. And maybe we never do, right? Like it could be a multipolar system.
Did you guys see any trends in the app layer across all the other types of, non-ZK, just apps in general? Was there a trend there? People building like decentralized social or anything like that?
I mean, you have Lens, but Christian, what do you think?
Yeah, I mean, social is a big one, but it's also like a hard nut to crack. I met a lot of people who are more interested in building on Lens than trying to compete with it. But a big like app trend I think these days is that we have some pretty big communities now. A lot of people are dealing with thousands of people in the Discord or something like that. And how do you like leverage the data that your community are producing to make sure you're making the right decisions and that you're getting like valuable insight out of them and things like that. So that seems like a big focus now. Like people are getting to a point where you need to take the analytics and intelligence side of like managing a project more seriously. And a lot of different products seem to be coming out now that are helping people get that data insight like out of their Discord and stuff. Because you can't just take like off the shelf solutions and apply them to the space. We're using a totally different sort of set of technologies. You need to do analytics on wallets too. So that's like unlocking another set of value, right? Because right now, kind of just like become a number in the Discord and that's it. So now this is enabling like more engagement and more insight to be like sort of peeled off that. And also taking load off of community managers it's a tough job.
That is a very tough job. Were there any projects in particular that is doing that type of analytics and engagement?
Yeah, there were a bunch. So I met with a couple that are just kind of different types of CRM. Like Bloxy was one of them that I thought was pretty cool for NFTs. And there were a bunch though that are all kind of like, okay, we have all this data, and then what do we do with it, right? The other part of that, which is like the other side of things, is that you guys are probably aware that with GDPR and then the associated regulation in California, they're like basically the data practices that like big tech does are going to be illegal within like the next 2 years. And so like that's pretty huge too, because we always thought about as a space going back like even before Ethereum, thinking about how like you can be sovereign over your data, but like no one cared, right? But now it's being criminalized to basically not be sovereign over your data, right? Like Google Chrome is removing cookies, third-party cookies into October 2024. So there's now like a date set on the calendar when like third-party data collection is just no longer going to be viable for companies. And that's where they get a lot of their revenue. And so now they have to think seriously about like, how do we get something that is going to give us the same type of like business intelligence and marketing ability without like violating people's privacy rights. And I guess they're calling it zero-party data. That's like the new buzzword for what this is. Which basically means like, it's my data. I'm choosing to hand it over to you. It's getting pooled, maybe anonymized, maybe not, and then sent to people I've consented it to be sent to. And that always has been, I think people always like tried to build things like this, but they've always been toys, right? Like no one cares. If I'm a company, I can get way more money out of just taking data than paying for it. But soon they won't be able to do that. And that zero-party data is never going to be as good as third-party data because you can't spy on everybody, right? Only the people who have consented to actually give over that data will be the ones that you get insight from, but it'll be their best option. And so data unions are also becoming really important in facilitating like that knowledge transfer. A few founders had said to me, they were like, look, before it's really hard to convince Web2 companies to engage with like a product like this that's built on crypto in any way. But now they're like, okay, well, we need this. I don't care how it's done. Don't even tell me how it's done. I just care about the output, which is the data that I need, right? They don't really care anymore about what the underlying sort of tech ecosystem is that enables them to get this data. It just so happens that blockchain
they just want the data.
The best solution. They want the data, and this is the best solution. So in a rare instance of government regulation helping us, I think that's going to drive a lot of adoption.
Yeah, speaking of regulation, I think one of the biggest themes, at least for me, was this one speech. I forget, but I think the person was also named Christian, but it was about regulation in crypto, and it talked about the current like DCPPA in the States and also the stablecoin regulation in the EU, and these are definitely real threats to DeFi as we know it. If the one in the States get passed, then we'll have some watered down version of DeFi that really isn't that much different than TradFi. And then if the one in the EU gets passed, like, it literally limits stablecoin volume and effectively puts a ban on algo stables. So have you thought about that at all? Like, what are your thoughts on that? And especially with the recent SBF revelations.
Yeah, that's been crazy. And I mean, I never would have expected like BitBoy is now like kind of our guy, championing sort of the
base like, BitBoy. Who would have thought?
New timeline.
That really came out of left field. So like this space never ceases to amaze me. But yeah, it's a bit scary, right? Like there's also the other stablecoin bill. I think you mentioned it as well that made some kind of statement like endogenously backed stablecoins.
Oh yeah, the American one. Yeah,
like that's a biological term. Like it doesn't even really. You're taking a term from biology and applying it to this. Doesn't make any sense to me. And like, what really is endogenously backed? They're trying to say you can't do Terra again, but like in reality, I think you could take that definition endogenous. Like, I don't know. I never really liked. I don't like these words that they're using. And with the latest stuff, when it comes to like the SBF suggestions, it's it's a bit scary, right? But who knows how far any of this goes? It takes time. So I think we still have time to scramble.
And
hopefully the key projects in the space manage to decentralize themselves to the extent that you just can't touch it, right? Like that's the best we can hope for at this point.
Yeah, I just can't help but think like Alameda and like not just Alameda, but a lot of different trading desks and institutions like literally made a killing off the blood of minnows on chain. I mean, it's part of the game. It's part of the business. But they go around and they like basically kick down the ladder that got them up. It's like, okay, now we're here, then no one else can get here. I don't know, it's kind of fucked up. It really
I agree.
Yeah.
But like if you think about it, right? Like Alamedas of the world made a lot of money kind of like farming retail liquidity, right? And then
literally
there is no more retail liquidity though. So they can't keep making money doing that because retail went away. So now like your best bet is to do this and kick out all like the degens, make it into a walled garden, and then package it up nicely and present it to the institutions so you can keep farming. I understand why they're doing it, but I agree. Like it's just really unfortunate.
Like SBF is an EV kind of person, and I understand that, and he has every right to be an EV kind of person, but we have every right to call him out on it, and that's what
exactly
we're doing.
Right. And we have every right to be decentralized enough to not be applicable to those kinds of regulations. I
don't know. It's just disappointing. I'll put it that way. It's like,
well, the thing is, like every crypto billionaire goes through some kind of like hero villain arc. He'll have a redemption. He'll probably like step back from FTX and start a blog. Like Arthur.
Step back from FTX and run for president. Why do you think he's
God Emperor?
God Emperor, SBF. Like, why do you think he's putting his face everywhere, like on his advertisements and stuff? Like,
control, right? He's gonna be.
He could like put like athletes' face, other celebrities, other noble figures, but he puts his face. I think he's trying to build his own brand equity to run for president or like run for Congress or something. Like, I don't know.
Yeah, I think also we fell into the trap of believing that he was like kind of like king of the nerds. And to me, it feels more now like that was like a much bigger LARP than like anyone could have guessed. He knows
King
what
of
he's
the
doing. You know what I
nerds.
mean? Like, he's not king of the nerds. He's much more of a like better tactician and politician than people give him credit for. It seems like.
Yeah, and he's been like him and the rest of FTX have been in DC. They have been putting the work there, lobbying, and we can tell based on like the way these bills have come out. And I feel like crypto needs to do much better of an effort, like being in DC or like supporting people that are in DC. I remember in June I went to DC for a conference of like crypto builders and like people in like that work on Capitol Hill, whether they're aides or whether they work in like regulation and stuff like that. And like DC is a different game than the world on chain. You have to be there. You have to like, you know, like people in DC have other priorities. They have a country to run basically. And crypto's just like somewhere in the middle. It's like up to us to like make it even higher of a priority. And I feel like as like the thing we need to do is more and more Americans like rely on crypto for their living or their jobs rely on crypto. That's the main thing. Like as long as like more people like jobs rely on crypto, then the less like touchable it is to make harmful regulation about it.
Yeah, but by the same coin, like the more people are speculating, the more people are going to come after it.
I'm not talking about speculation. I'm talking about like literal job, like all of us, like
job
we work in
jobs.
crypto.
Oh, yeah, of course.
Like real jobs, not like let me like gamble and YOLO on like.
Oh no,
Doge.
I agree, and we're all sort of paying bills with crypto.
Yeah,
in some
income
sense,
tax paying jobs. To be specific.
No, I didn't think that, but what I'm saying is that for every income tax generating job where there's a 1099 and all that, a handful of speculators kind of go along with that, right? Like if you work at a project,
100%.
then you have, in all likelihood, several people gambling on that project, and that's at least part of your liquidity. You can't really avoid that fact yet.
Yeah.
Someday, hopefully, but like right now, I mean, it is what it is, right?
Yeah. So, what are your thoughts on regulation? Are you hopeful that when we get to the end of the tunnel, that it will be full of flowers and we'll make it through, or do you think we'll have a watered down version of DeFi and we'll have to go somewhere else?
I certainly hope not. I really liked Davis's comments this morning. The raccoon, because he was like, "Why are we even talking about whether or not why regulate crypto, right?" Because people are like falling into this argument, like, "Oh, you can't not regulate something. Why not, right? Like,
why not?
We've been fine for 13 years. Let's just like continue that." Of course, that's like a very utopian thing to hope for, so it's not really realistic. But I think that ultimately, like, we're just gonna keep being accelerationist in terms of like paradigm and innovation, and we'll probably be ahead of like any useful regulation for a long time.
Yeah, I agree.
Right? This won't really come through for years in the market, and then by that time we'll be like sort of doing some unknowable, crazy, like new financial primitive type stuff that's just like beyond what we could even conceive of right now.
I know. It's crazy because like 4 years ago I couldn't conceive of like what has happened since, and like all the stuff that's happened on chain since. And I really hope that like they leave the world on chain alone. They recognize it as sovereign and separate from the state. And then like, where there's like on ramps like Coinbase and FTX and whatnot, like go ahead, regulate that. But when like, don't mess with the world on chain, because that's part is sovereign.
Yeah. Well, I don't think that the government believes that. I know somebody made a statement, I think it was somebody in Congress recently, that said like, well, because most nodes are running in the United States, everything
that's Gary
is our
Gensler.
Jurisdiction. Oh, was it Gary Gensler? Oh, I thought it was a congressman. But either way, like that's horrifying, right?
Yeah, that's terrifying.
But I also think it's like very, very, very difficult for them to have any like comprehensive regulation on the base layer. Like to me, it just seems like this whole talk about like sanctioning the ETH client is like kind of silly, right? Like, why would you do that when you can just go after like Circle? It's so much easier, right?
Yeah.
It's something that you understand. They have a bank account, right? You can just tell them, okay, like blacklist certain types of people. You can go after stablecoins really easily. It's much harder to create a framework to like regulate the action of validators. It's really weird to me that we're all like self-censoring right now with like OFAC compliant blocks. Like no one told you to do that, right? Like we all just like had this like collective fit and then decided that it would be best to like flog ourselves for no reason.
Dude, fucking Eric Wall spoke at Devcon. He had a phenomenal speech about this very subject. And not even Swift is OFAC compliant. Because if they were OFAC compliant, they would have to be OFAC compliant for every country. So like, these protocols and different entities are going farther than SWIFT, which is like underlying the entire banking system. It's ridiculous.
And massive banks get like hit with money laundering fines all the time, right? Like just take the slap on the wrist, they take it and they move on. I don't know why we could like. I would see a world. I think it's perfectly reasonable to have a world where like validators do whatever they want, right? And in all likelihood, because you're not really like choosing based on any like major heuristic that has to do with like who is transacting. You're just building blocks, or maybe after proposer builder separation, you're not even building the block. You're just proposing it, right? You don't care what's in it. So like if there happens to be a transaction that like, I don't know, funded Al-Qaeda in the block that you proposed, right? Like maybe you get fined for
Bring
it.
Bring it back to 2006.
Like, you're not gonna, people are going to go to jail. I don't know why we're freaking out about this. The banks do it all the time, right? I think JP Morgan got fined recently for like something
HSBC
like
and the Mexican cartels.
Oh, that's right.
Oh, yeah.
They knew about it. They're just.
I don't know if you saw JP Morgan. There was a ship that got seized with like
hundreds
of tons of cocaine on it that was owned by JP Morgan. So it's not too uncommon that these people just do this, right? And then they get fined and they move on.
Yeah, it's the cost of doing business, which is fucked up.
And we're not even talking about trying to do like massive. No one's smuggling drugs using Ethereum, right? Like using an account-based blockchain to do like illegal activity is one of the dumbest things you could possibly do. If you really think that tornadoing your money is going to keep you anonymous, then like you're completely full of it. It's definitely not. Like if they want to find you, if Chainalysis wants to find you, give them a little tornado.
They will.
I think they can pretty easily. So like we're not doing anything bad anyway, right? It's just uncensorable. It's not like anonymous to the extent that if I want to build like a nuclear bomb in my apartment and I need to like order yellow cake uranium from somewhere, I can like clandestinely do it and have it show up in my house using Ethereum. Highly unlikely that anything can pull that out.
Hey, are you a DAO looking for deep liquidity on your token? Are you looking to trade in size with the most minimal amount of slippage possible? Well, we have a DEX for you. It's Fraxswap, the first TWAM in existence as a time-weighted average market maker. It's basically a DCA machine, so when you make your trades, when you're a treasury manager and you rebalance your treasury and portfolio, you don't get wrecked by slippage. It's all handled for you by the TWAM. You want to trade over a day, a week, a month, Fraxswap has you covered. And don't forget, if you pair with the Frax token, you can go through governance and get a gauge and incentivize liquidity that way. So Frax, if you're looking for liquidity, you're looking to trade in size, Fraxswap is there for you. Yeah, all this stuff of sovereignty, what it comes down to, I want to like get to one of the main questions and kind of like the overarching theme of this podcast I want to get into. So Christian, what is your grand crypto thesis? And like for blockchain to underlie the global economy, because like I think we can all agree that eventually it will. But do you think we're going to be close to Satoshi's vision, or do you think we're going to have some watered down version of it? Like, what is your grand crypto thesis?
Yeah, I guess like Satoshi's vision, if we were to define it, would probably be like one CPU, one vote, right? Like that's kind of the distillation of what he thinks, what he thought. Peace be upon him.
Peace be upon him. The Holy One.
Yes, of course. I don't know that will happen. But that's like on such a big time scale, right? Like there's a lot of things that I think need to happen for that kind of thing to come to fruition. Like IoT is probably one of them. Like you need to have the cost of running nodes really low, and you need to have like really powerful computers that are also sovereign to some extent, like running in a bunch of stuff. And that's already kind of starting to happen, but most of them are like, Zuckerberg bots that are like can be controlled remotely and stuff like that. But like eventually, if we see that kind of thing proliferate, which has nothing to do with crypto, that's like a computer hardware thing, then you could have nodes everywhere and like everyone participating in consensus in like a very utopian way. But I think it's pretty unlikely. Blockchain will probably come to underlie most of the economy just because of the economies of scale and like cost efficiency things that you can get from it. And so that's both from like, there's a study that was done like maybe 2 years ago where they kind of like followed the paper trail of like sending X dollars through the banking system from like one country to another, and then compared it to like sending it with Bitcoin, for example. And the study found, and I wish I could tell you the name of the study, but I could probably Google it later. Bitcoin is like 1/60th cheaper.
1/60th.
Yeah, something like that. It was like in the range of 1 out of 60. When you total, like, okay, there's banks with branches with employees and like people who wear suits and are sitting in an office, and there's like Swift and all this infrastructure
and
all this
lawyers
other stuff.
And whatnot. Yeah.
Yeah, like right, like everything. And so that kind of thing, even for just payments, that's one efficiency. And then there's also like compute with consensus and state machines like Ethereum, and then also like generalized compute and file storage and everything else, right? Like all these things will be made cheaper as more people adopt it. And that's just ultimately going to mean that eventually using blockchain technology is just going to be like a sensible choice. Just like how when you get paid, if you get paid in US dollars, you probably don't get like a check in the mail, right? Like, you get ACH into your account. Just makes more sense.
Yeah, like the economies of scale will just make it that much cheaper. And because it's cheaper, everything's just going to become on-chain. And so, like, I feel like there's like 3 different parts of this vision. Like from from our past conversations and from reading Quantum, your blog, I feel like the 3 parts are validators and like the nodes and whatnot, stablecoins, and also like governance and the DAO area. I mean, there's obviously more parts, but like those are like the 3 parts I want to tackle here. So I know you're a big validator guy. You have like run your own validators. You're a big Pocket maxi. I love Pocket. Yeah. So what's your what's your validator thesis, and like what do you think of the current LSD environment?
Yeah. So like on validators, Ethereum, it's been really interesting. There's been like 1,000 new validators a day entering ETH, which is awesome.
Oh wow.
And
sovereignty.
Yeah, I mean, it's a good thing and a bad thing. So my best guess is that a lot of that activity, because if you look at it, they actually tend to deploy in like batches of a few hundred at the same time. So my guess is that exchanges are scaling up a lot. It's probably like Binance, Kraken, Coinbase, which isn't the best thing ever, but like, are we surprised, right? So like, no, that's who's scaling up. So a lot of networks are looking pretty robust. Even like Gnosis Chain has like 100,000 validators. Didn't know that, but they do.
Whoa.
So that's also pretty impressive. That was they announced, or they stated that at Devcon. I didn't realize. So a lot of people supporting Dark Forest. Apparently it's got product market fit. So
hey, that's all you need.
Exactly, right? Well, there's other stuff on Gnosis Chain, and they're going to be doing some cool stuff pretty soon, I think. But, in terms of like liquid staking, obviously like Lido is kind of the main guy right now, but I think there are more coming online, and most people, and I don't know if it's like the direct view of Lido, but it seems like most people have this expectation that Lido's not going to be like king forever. There will probably be like 3 to 5 major liquid staking derivatives that are in the market, and the sort of economy of swapping between them will probably be like a huge engine of growth, like Curve Finance and others that want to like support that. Maybe like Fraxswap or something of that nature.
Did you see
right?
Frax just dropped FrxETH?
Yeah, I saw it. I saw that's out now, and so that's going to be a big one, I think. It seems like Frax is pretty well positioned to be one of those big players.
Oh yeah.
If I were to guess, I would probably guess that like of like the top 3 or like 3 important ones, probably Curve ETH, and then FrxETH, and then as like a third one, I mean, I just don't want to go out on a limb and say Rocket Pool ETH, but probably like Lido ETH is like the other. Like,
wait, what do you mean by Curve ETH? Like, you think Curve's gonna have like its own?
Well, aren't they planning alongside the stablecoin? Aren't they also planning
an ETH validator?
ETH derivatives as well? I was under the impression they were, but maybe not.
Wait, I mean, I haven't heard that or read that anywhere, but it would make sense. Like, it would make, honestly, like the same way like everybody hopped on the VE bandwagon. I'm sure everyone's gonna hop on the validator bandwagon, but they won't do it as well as the OG players in Frax.
Yeah, exactly. So it's, but I hope for a multipolar world, and like that's gonna be great. Like, you can imagine, like, especially like the permissionless validator protocols, like the Rocket Pool and stuff like that. If you can go and you can like set up your own validator, stake your own ETH, get your own, liquid staking derivatives back, and then LP those into the pools that, swap between, that'd be a pretty nice, like, additional source of yield.
Have you looked into Frax? Oh, go ahead, Kiet.
I just want to double click here to see in this multipolar world, how many liquid staking alternatives would be like too much. Like if everybody had a staking liquid derivative, how does that impact DeFi? I feel that would just like fragment ETH liquidity everywhere.
Yeah, probably. But like what you end up getting in that case, most likely is just like meta derivatives, right? So like if you have like a 4 pool on Curve that has like 4 big ones, and then you just like, you can like collateralize a token based off of that, just something like that. So I think the market could support a lot of them. But ultimately like more than 5 probably won't have like big liquidity. They'll probably like smaller ones will probably end up having some kind of like incentive structure on top of it to give you like better yield in one way or another, whether it's like inflation and tokens and like that kind of a subsidy or like something more exotic. But they probably will have to do something like that to keep like a small dedicated, like more risk tolerant group of people staking there rather than going for like the safety of like a decent one, right? Because there's like pretty big risk when you get like any liquid staking derivative of like depegs, of issues with their like pseudo network that they usually operate, right? Like they're kind of like putting a lot of faith in this like network of validators that you may or may not be a part of, and making sure that they can coordinate it and that the funds are being custodied properly and stuff like that. So the most risk tolerant people will probably end up in these like sort of take your ETH yield from 8% or 6% to like 15 by a bunch of token subsidy and like other stuff like that.
Have you seen FrxETH? Have you seen how it's architected?
I haven't looked super deeply into it, but as always with the Frax products, it's super exciting.
Yeah. So this is a 2-token system. You have FrxETH, which is the equivalent of WETH, but I like to call it the Chad WETH because WETH doesn't do anything, but like FrxETH, like when you like exchange your ETH for FrxETH, like that automatically goes into a validator, and then you can stake your FrxETH for sFrxETH in a 4626 vault. And that's where you earn yield. And there's always going to be like above baseline yield because not all FrxETH is going to be in that vault. And on top of that, you're going to have the curve pool and who has the most convex, who's friends with the most people with convex and curve. It's Frax. It's so like...
Well, and then there's also pitch too that should be helpful on that front.
And they have, exactly. And then they have pitch as well. And then on top of that, they have FrxLend. So I'm sure in the future there's going to be ways... Like you can use like whether it's like Curve LP tokens as collateral. I know Drake has leaked that before on a space I was with him. Whether it's like sFrxETH or FrxETH or whatnot. There's gonna be ways to like leverage that for Frax in the future. It's super exciting. And we talked about like Rocket Pool before, like how they have the bonding. Sand has talked about with FrxLend, you'll be able to like if you want to become a validator on FrxETH. Like you can just like bond your FrxETH and like become one in the same way with Rocket Pool. So it's like a super elegant system. They really thought it through. And like what is an LSD but a stablecoin for ETH? So,
Exactly. Yeah. That's exciting, man. That seems like a pretty attractive place to park some ETH. So I have to look into that more deeply as well. Yeah.
So I know you're a big Pocket network guy. Can you give like a little bit of like what Pocket Network is for the people who who don't know about it?
Yeah, absolutely. So Pocket is basically a network that provides for RPC relays for a number of blockchains. So like when you connect to a wallet, when you're using a wallet, like your transactions have to go somewhere, right? Like a transaction is just like really a JSON object with some data and then a signature that proves that the wallet, the key that you own can like has the ability to authorize that transaction. And they have to be broadcast from your wallet to a node so that it can be gossiped to the network. And that like transition over HTTP from a wallet to a node on the network is facilitated by the RPC API. And so every network has something like this. This is how you transact. And so most of the time we use services like Infura or Alchemy to do that. And most of us don't even really think about it. Because when you set up your wallet, you just have like a default link. But those links are unsafe. They have been hacked. So like the Polygon mainnet, for example, the Polygon mainnet RPC got hacked not too long ago through a DNS attack where basically like somebody switched out the A record on the Polygon mainnet.rbc blah blah blah.
Oh, that's terrifying.
.com. Yeah, so it was really funny because it was like a very, very sophisticated social engineering attack, right? They were calling, I think it was Namecheap or GoDaddy, one of those two registrars that did it. Somebody was like calling them and convince them like, hey, I'm the admin of this. Like, I need you to switch it to this. And then now they can point this link at anything they want, right? They point it to one of those Google form scams, like MetaMask support, like, oh, error, put in your private key into this Google form. So pretty like low tech, low effort scam for like a pretty like advanced attack. But anyway.
Honestly, like all those DNS attacks are fucking terrifying. I remember like, and even like the biggest protocols like Polygon are not immune. It happened at Curve. It happened at CoinGecko. I remember I went on CoinGecko.
Yeah.
I'm like, what the hell is this? Like, why are they asking me to like sign this transaction? And it's like, this is why we're still in beta. It's like terrifying. Like, you don't like every time you like sign something, like you don't know if like the RPCs are fucking hacked or whatnot. Like, no wonder why we haven't hit mainstream yet.
Well, actually, so that is interesting as like a tangent here on DNS attacks. That's not our fault, first of all. That's like just bad architecture of DNS providers. And ICANN, the body that like sort of handles like top level DNS stuff and governs that, is like very much aware that it sucks that we have these companies that where you can like fool somebody at the company and then change someone's website. Like that must cost the economy like tens of millions, if not more, every year in damages, right? Like for your reputation, stolen money, loss of business, downtime, etc. And so it is like there's a pretty long report from like a year ago or less where they're basically trying to identify ways that they could decentralize that. And they actually mentioned by name a few crypto projects in there. They talk about ENS, they talk about Handshake, talk about unstoppable domains. And they kind of like consider them like, look, because their view is that like one way or another, we can't really have like these GoDaddies be so powerful in the world of like top level DNS because it's just costing people money, right? Like it's just not
No daddy.
No daddy. Name cheap, no thank you, right? Like nobody wants that. So they're trying to figure out ways.
Name cheap.
Yeah, cheap customer service. So like I can just call up with a, caller ID from some random country and be like, okay, hey, can you take google.com and can you actually like point that to this other IP address? And then they're like, yeah, okay, cool. You look like the CEO of Google. And then they do it, right? Like it's just that kind of a system shouldn't happen.
Yeah.
But anyway, back to Pocket. So basically it's a network of nodes that facilitate those calls being sent out to different blockchains. And the network itself is taking in incoming requests through portals. There's one right now, eventually there'll be multiple. And then routing that to the network that it's supposed to go to. And I think it's a really exciting, interesting project. It's one of those things where like RPC is like the bedrock of what anything is doing, right? So there's always a market for it. They do like 1.5 billion relays a day, like individual calls. Yeah.
Wow.
So it's pretty impressive. I do think though, as a caveat, so first of all, I probably should have said this at the beginning, but not financial advice, do your own research. Opinions are my own and not that of my employer. But I would say like with resource networks in general, and I think they fall into that category, in this kind of like pre-mass adoption stage of them, tokenomics is really tough. And that's kind of across the board.
Yeah.
So like if you look at anything, look at like Hush, Dfinity, LivePeer, Storage, Filecoin, Arwe, right? Like all these networks that are doing different things like that are providing you a service. Even like what's it called? The audio one. You run nodes for this.
Audius?
Audius. There we go. Yeah. Sorry. I literally have a node for it, but I don't remember the name. I wanted to say Audacity, but that's like the
thing. Audacity. That's like the podcast service.
Yeah. But anyway, all of those resource networks, right? Like it's really tough to have like a decent sort of economic model at this current stage. I think probably the first one to really crack it will be Chainlink. And that's just because Chainlink is so big, right? Like they have a vision for their economics. It probably is going to wind up in a lot of Link getting staked. And by the end of like 2023, I think it's going to be a pretty interesting landscape with respect to that.
A Linky renaissance, one might say.
Yeah.
The return of the Link Marines.
Yeah.
Oh, they never went anywhere. They never went anywhere. They're still logos.
The Link Marines were like the first meme force in crypto. Like from the boards of 4chan to Twitter, and they were just relentless. They actually, I think they're the ones that like took Pepe like away from like being political and like brought it back to being like not normie friendly, but like friendlier. I mean, also I think like Hong Kong protests had something to do with it. do with it as well. In 2019, I was like, wait a second, like these people are fighting for democracy, and I'll never forget the one Pepe with like not my eye, like they hit my eye with the Pepe. It was like that was such a badass picture. I'm like, there you fucking go. And then,
I think Link people took a poo, like the small Pepe, and like made that into their thing, and then that kind of just like backward propagated across all of crypto and like all the other Pepes and like. Yeah, but I don't think they were the first crazy meme community, because wasn't Hex a little bit before them, and they were also like kind of a psycho. Like,
well, Hex is
the Hexicans, and then also the Digibyte people. Remember Nano/Digibyte? There were some rabid Digibyte people.
I vaguely remember. I mean, 2017 was. I don't think Hex existed, and I consider Hex like separate from like the rest of crypto culture. Like I'm pretty sure like Richard Hart like literally did mails like by mail, like sending them to people like, hey, check out Hex. Like he did it in like a very like old school fashion, and like he was able to. I mean, I think Richard Hart has like a IQ of like 150, 100. He's like technically a genius or something, but like he was able to like rally up like a bunch of people around this coin, and like I mean everybody thought it was a Ponzi, and kind of is. I mean, like.
Well, I mean, he had a point though. For a while, it was like a really well-performing Ponzi.
Yeah, I mean, no, he does have. That's the thing. He's really smart, so he does have points.
Yeah,
don't get me wrong.
But I mean that. Yeah, so that community though, it's like a little bit less united, I think, because they're all just like simping for one guy. Like, yeah, Chainlink has their whole thing about like Sergey, but it's also kind of, they're more in it for the tech. I hate saying that, but like that's what they're interested in.
Yeah.
More so than just like their demigod.
Yeah, they're like literally the demigod. Like in his Twitter bio, he's like very intentional. He's like, I own the world's most expensive diamond.
Well, you see his pictures on Twitter too. It would be like him like on the phone, holding like a Louis bag, stepping out of a Lamborghini, like,
and then like twerking
like,
all over the place. Yeah, it's like incredibly cringe, but like for a certain audience, they're like, that's our god. Like, I want to be like that. He's going to take me to the promised land.
It's the same people who wind up like following all over those like other internet gurus, whoever they may be. It's like the Andrew Tate type of crowd, in a way, but for like, you know, financial technology. So, but the Nano community was also like insane.
Oh, Nano.
Yeah. So they were Nano, and then they rebranded to Digibyte at some point, and like the only value prop of the whole ecosystem was just fast payments, right?
Yes.
And then I think they got 51% attacked at one point. So it wasn't even like a viable, but they were like super insane. I'm one of my first crypto Twitter friends on one of my old accounts that I don't use anymore really was, I wonder if he's still around, but he was this like shill who was like a boer in South Africa who ran like the Digibyte Africa community. He was a cool guy, but also just like so brainwashed by Nano. It's like, what do you think is going to happen with this? Honestly, like, where is it going to go? But
future
had a nice
France, obviously.
And then there's a community for everything. So like Purecoin, right, which launched in 2013 or 2014. They kind of like invented proof of stake, right? Nothing really ever happened with Purecoin. I don't even think they were really aiming to be like a computation environment. It was just like, here's proof of stake, here's how it works. And I had made a comment like kind of offhand, trying to like use that as an example of like a dead project. Because it is dead, right? Like no one is using Purecoin. Who uses Purecoin, right? It's from like almost 10 years ago now. It was an experiment, right? And I had people come out of the woodwork and come after me. We're talking shit about Purecoin, which 99% of crypto was not around when Purecoin was like a thing, including I think the three of us most likely, like in 2013, 14. Maybe not. Maybe I'm being too presumptuous, but like that time. They're like maybe 1% to 5% of the people who are here now were there back then. And I still had Twitter shills come after me. Some guy was like, oh yeah, Purecoin has no use, no users. Well, how come I bought a house with Purecoin? I had no idea. Like I highly doubt you bought a house with Purecoin, but like, awesome.
Yeah. Wait, so what's your crypto origin story? Like, how'd you get into this shit?
Oh yeah, so I started degen trading in high school. And that was like, I had gotten a laptop and bring like the laptop to class and like just hang out on Poloniex.
You mean the Poloniex troll box?
Dude, the troll box is the best. I love the troll box. I missed that. Like that was the best thing about exchanges. that it needs to come back ASAP. Like it just made trading, it made staring at a chart so much more entertaining because you could just be like trolling in the troll box and then. But anyway, yeah. So did that like sort of as a hobby and it's like fun for a while. And then when I went to college, and this was like in late 17, I got like email from the school because like my school like get blasted with like emails of clubs trying to advertise and that kind of thing. And one of them was like, hey, join the crypto club. We're brand new. We just started. And I read the subject line and I was like, well, it could either be cryptocurrency or it could be like cryptography or like puzzle games or the Enigma code or something like that. And I was like, well, I don't really care about cryptography. I don't really care about puzzles. But then something inside me was like, okay, just open the email, dude. Like you just got here. You're supposed to see new things. Like don't be so dismissive already.
You're supposed to open your mind.
Exactly, right? So I opened it. I was like, oh, it is cryptocurrency. That's cool. I'll like join this club. So I did, and I went, and within a few weeks, the president of the club, who unfortunately is no longer in crypto, but is a very, very smart person, he had a friend at Block Tower who had graduated years before us, and that guy wanted an intern. So he came to the club one day and was like, all right, who wants an internship? It's like 10 hours a week, and it's paid. And no one raised their hand except me and one other person, which is like, you don't like money? Like, dude,
you don't like
10 hours a week? Yeah, sign me up. It was like $15 an hour, 10 hours a week. And this was like 2017 before $15 an hour was like standard minimum wage everywhere. So that was like, yeah, $15 an hour, ballin', nice. Like, minimum wage is like $7.50 or something. So yeah, it was pretty cool. So I said, yeah. And me and another guy were kind of like the candidates for it. And we did like these little research challenges, but the other guy had also just gone to China for like a few weeks to teach English and had no time. So it was kind of one of those like, all right, well, you're the one doing the stuff, so I guess it's you. So, and he didn't know that I was like a freshman. I was like 18 years old at the time. So I called him. He's like, yeah, okay, great. He goes, are you sure you want to do this? You're a freshman. You should probably just go like enjoy yourself or something. I was like, no, I want to do it. Like, please. I was standing outside because my building didn't have phone reception, and I was like getting bit by mosquitoes, like running around, but be like, no, please, like give me this chance.
Yeah.
And then that translated into like, no, literally, that translated into like 2.5 years of being the intern there, which is sort of what like sealed the deal, I think. And then I did a bunch of other stuff with different people one after the other, and then wound up at Coin Fund afterwards.
Where'd you go to school?
Dartmouth. Yeah,
Dartmouth. Damn, a lot of mosquitoes up there in New England.
Yeah, it's really bad. Like in the fall, because this was all taking place. That initial call was like October, November, so it's still like warming up. Not enough frost yet that like the bugs are active. So I just remember the bug bites, but being like, okay, I sealed the deal. That's all that matters. I'll go get some aloe for these bug bites later.
I went to UMass, and like I remember how. Oh, go ahead.
I just wanted to double click on the story a little bit. So you went during your university days, you were basically at Block Tower, and then when you kind of graduated, you moved to Coin Fund. Is that the transition?
Kind of, yeah. So, and the other detail I'd add is, so they said originally like 10 hours a week, but I ended up working more like 30. It was never. I never once worked a 10-hour week. It was always like
a 10-hour week in crypto. Like I don't think that exists.
The thing was, like, they paid me for all the work that I did. So like, if you worked 35 hours, you get paid for 35 hours. So I was more than happy to work like as much as possible, but 10 hours a week was just not true. And then so I started at Coin Fund in October of 2020. So right as like my school was finishing. And so I was the intern there for about 8 months, and then I became full-time afterwards. But that was also like at the end of school.
Nice.
Yeah, I was gonna say I went to UMass, and I know about those mosquitoes and shit. And I remember how humid it was. Like when it's the summer, and like especially all the vegetation, all the greenery, it gets so hot. I would be walking to class and just sweating my ass off. Like I would have to like it was so bad. And then like
that cold in the winter too.
Oh my god! And like it would be like from basically you had like September was like hot, then October like starts getting chilly, and then it's just cold until April. It's just fucking freezing. Like Kiet, you have no idea because you were in Cali and shit. No idea. But like when it got 50 degrees, we were so pumped. Like we were like, shorts, like short sleeve. Yeah, I remember like.
Hey, look, there's a reason why I live in Florida now. I don't have to deal with that anymore.
You're a Florida man now.
Exactly.
Yeah, I'm sure. But yeah, so and were there other people at Dartmouth into crypto as much as you were, or were you like the only one?
No, I wasn't the only one. There were a few people. I think I took the obsession to sort of like the next level in some ways. But I mean,
heights.
the club started out pretty big, and there were some pretty interesting people who were like into stuff. Like there was a guy who had like an ETH miner that we like messed around with and stuff. So there was decent interest, and then over time, like things kind of changed, and the focus of the club transitioned from like tech to investing. And I think that caused a lot of people to lose interest because also that coincided with like the massive bear market, right? So this was like through 2018 when the market was just like taking a shit. The people who were running it were more like finance people who were interested in trading and not as interested in like technology. And so
they weren't in it for the tech.
Exactly, right? So then it was like, okay, none of us are making money trading. We don't have that much money anyway because we're college students, and we're also not going to get any like official school funds to start a trading club because there's like other, like emerging markets club that had school money and like the Forex club or whatever, right? Like some clubs get money that they can sort of like do prompt trading with, but like they don't profit from it. The school profits from it, but it was like we're never going to get that money, right? In 2018, you cannot ask the university endowment to give you like even $1 to trade with. So that wasn't happening. So it's kind of like none of us have money. So like why are we doing like TA or like othering with like price analysis when we could just like learn about cool tech and actually do something?
Yeah. So how was your bear market, like last bear market, not this one, but like 2018, 2019? Because I remember how cold and desolate it was.
Yeah, it was. So I mean, at that time, I wasn't like working full time, right? I was like interns, and thankfully, Block Tower kept me around through most of that bear market, so that was nice. And so I wasn't like cast off or anything like that. It was definitely one of those things where I was like, even though my investments lost a lot of money, that also wasn't going to like financially ruin me because I was a student and this was like a pretty trivial in hindsight like quantity of money. But it was like pretty. The pain was there. Like you could see in a lot of people, like that was when the consensus layoffs were happening and all this stuff, and Twitter went really dead for a while. But it was, for me, it was just like I just kept working. I started doing like software development stuff a little bit more intensely as well at that time, and so then like it got more interesting around like early 2020. But yeah, 2018, 2019 was pretty quiet. I was kind of doing a lot of like repetitive motion with like certain projects at Block Tower, basically.
And you're also enjoying being a college student, as you should.
Yeah, there was like other stuff to do as well. So like I was also trying to like the middle of the bear market is kind of when I also like completed my thesis and like was doing my real school that I wasn't like super interested in, but had to finish at some point.
What was your real school and thesis?
My thesis was a study on the period of certain types of binary stars. So I was like used a telescope in South Africa for a while and like observed a bunch of binary stars and did like a sort of a study on that. And I think like the efforts of the group, part of the plan was to sort of like inform targets with further follow-up by telescopes in space that can't like look at everything. But I don't know. I never really saw it that far through. So
you never saw that far through the
like I finished my paper and like that was done. But like after that, I was like, okay, see ya. Like I have like trading to do.
I got an ape.
I want to go be on Twitter and like see my friends. I don't want to keep like sitting in a telescope in the middle of the night. And
I was like, oh, you're like looking at the stars like marine and like astrology and just
yeah, that's the thing. Maybe if only I had the Marin idea a little bit earlier.
Yeah, if only you had the astrology background and not the astronomy background.
Yeah,
it's good to seeing all these stars if you can't
Well, I don't know if you've seen now, but Marin is doing like a Yearn Finance for astrology type of project now.
Oh, good for her.
Oh,
yeah.
Wow.
So you can like deposit into a vault that like I basically like trades on the stuff she puts on Twitter, basically.
Moon phases and such.
Yeah. So if you want to like do some kind of option spread every like Sagittarius rising or something like.
Oh, that's so crazy.
I'm a Sagittarius rising.
Yeah, I don't know what that means, but like, you know what I mean.
Just know the keywords. Right. Okay, so Christian, let's now jump forward into this bear market. Earlier in the call we started by saying there was no bull market grift, but there's also no bear market despair. So what are you doing around this bear market?
It's all about getting like positioned and ready to go. And like there really is like no bull market grift, no bear market despair. The difference this time is like in 18, right? The economy was more or less fine, but like our whole thing like took a shit and died, and no one was using anything, and we didn't have any good use cases, right? Like what's the best that we did that cycle? Besides like blockchain technology itself and like smart contracts, right? There was not a lot built on top of it. I mean, you remember back in the day, this is when like people thought that you were going to be using Mist to interact with Ethereum. Remember the Mist browser? Before there was like MetaMask, before MetaMask was like widely adopted. So like it was stuff like that, right? And like Ethereum basically was like stillborn. Think about it, like with the DAO hack. So like there were so many issues and people just disappeared, right? Like this time around, there's too many of us, and some people have left, but there's use cases that are there. People understand what they are. They're usable, right? Like MetaMask isn't the best user experience, but it's a lot better than Mist. Like Mist sucked. MetaMask is okay.
Yeah. I would say the only use case that was around was ICOs, like being able to raise money. Exactly. That was the use case.
Yeah, and people were raising money for projects. I mean, you could raise money in the abstract, but then when you ask like, okay, but for what? They're like, we don't know. We just want the money, right? Like there were like $5 billion ICOs that happened at that time. I don't think any of them really delivered. EOS technically didn't, but there's like all kinds of other stuff around that with how that went out. But like Telegram raised like $1 billion, right? Nothing happened. Kick raised $1 billion. Nothing happened. There were at least
Telegram was like forced to return their money, right?
I think so, yeah. But Kick, I think, kept the money.
Kick kept the money.
I think so.
So like there was nothing. That now there's something. And so with this like sort of market, like if the economy was better, we'd probably be like up only again at this point, right? But now we're sitting here, there's like a nuclear war about to happen, and the Fed's going crazy, and we're all just kind of like waiting, right?
We're all just waiting. Yeah.
Which is actually in itself very unfortunate, because the whole point of crypto is to be an alternative, but we have so many investors in this space now that are too like intermingled with the rest of the world that like this is a risk asset, and so people sell it when you sell risk assets. But like, the whole idea in the first place was that this wouldn't happen. But I guess that's how you bootstrap like new technology, right?
Yeah. What advice do you have for people in this bear market, from like new people and stuff?
Don't buy unproductive assets. That's probably like in terms like advice for an investor. Like I would. I know, just say,
advice for builders.
Yeah. Oh, for builders. Dude, keep building, man. Like the thing is, like if you look at venture funding, like it's come down a little bit, but projects are still getting funded. I heard Eigenlayer is like raising at some like incredible valuation right now. I mean, that's like one of the bigger, more like flashy.
Yeah, I keep hearing that.
Big name projects, but like people are raising money. Deals are getting done. Grants are being written from foundations. VCs are writing checks. Like you can still build something and execute on an idea. And remember, like Uniswap and lots of other successful projects, they started out in 2019. So I think waiting until a bull market to like deploy is not necessarily like the playbook that has like given the most success over the last few years. Waiting to deploy your token in a bull market is one thing, but like actually having your project like up and running before that, I think is really important.
Yeah, no, I feel that. And I think Gelato did that brilliantly.
Yep.
They like started in 2019 in the middle of the bear. They built a product, and then they like launched their token in the middle of the bull. But yeah, that's definitely the way to do it. And just like as a builder, position yourselves for when the next bull market comes. You already have something live. You already have something running. And then like when you figure out like, okay, it's getting used, like what do I need to incentivize in my product? And then you can construct tokenomics around that and then launch your token.
Exactly, right? And like the tokenomics side of it, how your product ends up getting used, I think should also inform like what your tokenomics will look like. And you don't want to have to be like changing them retroactively. To govern. I'm also the other advice I would give is governance. Minimize your projects.
You wrote about that, yeah.
I did write extensively about this.
Can you go into
something very?
Yeah, like basically the crux of it is like we need to ossify, the main parameters of these protocols before like TardFi and traditional institutions get in to ruin everything.
Yeah, I mean, part of it is that, right? Part of it is like there's genuinely bad actors out there. And at the end of the day, you don't want TardFi like governing your projects. But the other part of it, it's inefficient, right? Like look at what's happening in Maker right now. Like there's all this back and forth. Like, and obviously I'm not going to go stand here and say like Maker should just rip out all its governance tomorrow. Like that also wouldn't work, right? Like they do need to make decisions, but minimizing the surface to make those decisions is really important because otherwise we kind of devolve into like a worse version of the government that we have in real life, right? Like we've decided in the real world to like delegate certain decision-making responsibility to smaller groups of people so that like things happen real quickly, right? And they still don't happen quick enough, you could argue, but they certainly happen quicker than if like every single American had to vote on like every single thing that crosses the Senate floor. So like, why are we doing this like hyper democracy thing? And that was like a big in 2021 into like the early parts of this year, like the DAO utopian people were like, oh my God, like everything should be a vote. Everything will be great. Everything will be beautiful. And we'll all like sing songs together. But like, that just doesn't work. Most people don't care. And so,
dude,
and there have been governance attacks too, right?
There have been crazy
so
ones.
Instances.
Compound,
like
Bean.
Yep. Why are you talking about the Compound one that Justin Sun did?
I think there's one that Justin Sun did, and then there was one where Robert Leshner was like, "If you don't return the money, I'm gonna like call
the IRS one, right? Yeah.
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 He was just that was wild.
There were those ones. There was another one on. Well, this wasn't really an attack, but it was like was it Faye and Rari after they merged? They got hacked, right, and a bunch of money was lost.
Yes,
and there was a vote in the community to like decide whether or not they should
to
reimburse
repay,
the people affected, right? But it was something where like it was mostly Rari people affected and not the Faye people or something like that, right? Mm-hmm. So people weren't happy and the team didn't want to pay these people affected out of the treasury. So they had one vote. They say, yes, compensate the people who were affected if the vote passes. And then randomly before they can execute the multi-sig, they're like, oh, actually we're having another vote. And then mysteriously, more tokens show up, right? And they voted down, and they never got compensated. So, like, that kind of stuff just needs to not happen, right?
Yeah.
And the only way you can do that is just not govern.
The real interesting solution, which, like, it actually turned a really terrible situation into an optimal outcome. Well, not the most optimal, obviously, but, Frax and Olympus were the largest ones affected. And the proposal, like, they were like, first they voted like, yes, reimburse them. And then they got cold feet. Their board of directors, quote unquote, were like, oh, we need to have like another vote. They voted. It somehow got voted like mysteriously no. And then like they came out with like a new reimbursement plan where basically Frax and Olympus and all the biggest depositors in Rari just got fucked from it. Like only got paid like a cent on the dollar. And they thought of a really elegant solution, and I gotta like commend the Olympus guys and Shadow for like coming up with this to basically bribe the tribe holders to have like another vote that will reimburse like everyone. And although they didn't get reimbursed, 100%, I think Olympus and Frax got reimbursed 50% when it was all said and done, which is like better than nothing. Like, you have to think about it. If this went to court, this probably would have taken a decade. Even Mt. Gox is still going on. So like the fact
and
that
Ripple and everything,
Ripple and all this stuff, like the fact that they were able to come to some compromise, although it wasn't perfect, on chain in a matter of months. Like, that's something you can show to, people outside of crypto and say, like, hey, look, we can handle our shit. Like, hey, look, like, we, things aren't, like, the cleanest thing on chain, but nothing ever is. So, like, I got to, like, give it to, like, all parties in that regard for that outcome in governance.
Yeah, and it was Olympus and Frax and a few others who kind of, like, acted in unison, right? I think there were, like, 5 or 6 big parties affected that made, like, a bunch of joint statements and stuff like that.
And, like, the whole thing with Faye, I mean, like, let's get into stablecoins since we're, like, on the topic of Faye. Like, I mean, there's DeFi, which is hard enough, but stablecoins are, like, the brain surgery of DeFi. Like, if you fuck up, you fuck up. Like, it's either works or doesn't work. And, like...
It's mechanism design on steroids. It's actually, it works. They always work until they don't, right? And like there's always a bunch of externalities. Yeah.
Yeah.
You know that video, I forget his name, the streamer who's like watching the tribe price and he's like on stream, he's like, oh, what the zero? Oh.
Yeah, no, it would say like that.
One candle. It's like just up, and then one candle directly to zero.
Yeah.
Yeah, it's amazing. Like,
so let's get your thoughts on stablecoins, where they fit into the bigger picture of crypto, and then of course, like, what do you think of Frax?
I mean, it depends on like what stablecoin you're talking about, right? So
just
like,
the stablecoin field,
just in general, stablecoins.
Yeah, of course. Well, it's important, right? Because no one wants to hold volatile assets. Economic activity doesn't take place in volatile assets for the most part, right? It's annoying. It's more complex operationally. Like if I don't know, if I'm running a restaurant or something and I have to buy like a bunch of beef and like vegetables and stuff every month, like I'd prefer if the prices of that fluctuate, didn't just fluctuate with the price of Bitcoin, right? You already have goods that you're buying that, or whenever economic activity you're undertaking that has like a varying price, but then also if the asset you're paying for also has a varying price, that's kind of annoying. So we need stablecoins, right? I don't want to get paid in Ethereum personally. I'd rather get paid in stablecoins.
But ultrasound money.
I know. Well, look at the burn chart right now. I think we're still inflationary. Fees are too low at the moment. So yeah, you can pay me at ETH when the number's going up, but not when it's going down. Not to mention on the tax side of things, you don't live in a world where like tax code is set up to be like dealing in volatile assets like that. And as much as I would argue that, taxation is theft and bad and all that, like the government also has a monopoly on force. And so if you don't pay your taxes, bad things will happen to you, right? So you have to. So you now are punishing yourself by paying short-term cap gains of 34% in the US. So you're paying like 30-ish% on everything you do. Like that's a bit ridiculous, right? Like every time you're converting that volatile asset, we need stablecoins for that reason.
Yeah, and from the beginning of like the first onset of algo stables with like ESD, GSD, and also like Frax was in that cohort to now, like what are your thoughts on like everything from ESD to like Terra, like this whole like stablecoin arc?
Well, ESD and DSD, they were sort of like interesting experiments, but I think that's like the prime example of just waiting for like the black swan event to take place, right? Like when you're using these like elastic stable coins that are just kind of oscillating around a peg, like you pull the rubber band enough and they just kind of go like shoot off into oblivion. Terra, like also, well, I think Terra in theory probably would have at least lasted a lot longer if they actually were doing what they said they were doing. So that was like the big problem, right? Is that people thought that it was just like, backed by these assets like Bitcoin and Avalanche, and they were buying Avalanche at one point and some other assets, and it was really just Devcon kind of like taking money out of his pocket and like propping up this like hyper growth of this stablecoin, right? But if they had been a little bit more conservative, right, I think it could have lasted longer. Like, would it last forever? Like, probably not. But maybe like potentially if you had managed if they had managed the growth of it like appropriately, right? Like their rapid hyper growth led them to a point where they were vulnerable enough to be sort of like taken down with on-chain action. But if they had like maybe grown over a period of decades, like probably could have gotten somewhere with that.
Imagine like growing over decades and all of a sudden zero.
Fucking I know. Zero. Well, yeah, that's the problem.
Yeah, right? that's even worse.
Kind of part of the issue. So it either way, like there's always going to be like bad externalities, right? So it's kind of tough. But I guess in the case of Frax, the productive activity that through the AMOs, I think is like, seems like it's far more robust than just like propping up a reserve with like a bunch of other assets, right? Like ultimately you want to be creating revenue to bolster something, less so than you want to be just like relying on the value of an asset. Because otherwise you get led into the Terra situation, right? Where it's like, okay, the value of our Bitcoin went down. How do we start like shoring this up? Or that the whole show coming, to a crashing halt. So
yeah, I realize with stablecoins, it's a lot easier than people think. Like, what's the number one thing like you want people to do with a stablecoin? Hold it. Like that's why it was such a big deal that like, when Frax and Olympus partnered, like Olympus was the first major holder of Frax. And then like from there, like you had other major holders like Temple and whatnot. Like the more like big holders you have of it, and like of course you want like velocity of money and people like trading and whatnot, like, but you need like to have, if everybody just like dumps at once, then that's a lot of pressure on the peg. But like most important thing, you want people to like hold your stablecoin and use your stablecoin.
Exactly.
Yeah.
I think the core tenet of what Frax moving, difference between Frax and Terra, if Terra had taken like a more conservative approach and grew slowly and put those assets that they're slowly accumulating into their treasury to work like how Frax did, like imagine they did something with all that BTC, right? Loaned it out or do some kind of AMO type, a pseudo AMO type thing. I think they would actually gotten a lot further and slowly build that deep liquidity that's kind of needed. And I think that's how Frax is taking it slowly and surely and building a robust system to support it. Because in addition to holding a stablecoin, I feel the next level is the deep liquidity of a stablecoin, just in case there is a dump, right? I think that's literally the two steps.
And yeah, that was a big issue, I think, in the Terra side too, is that the product was less so UST and more so just the fact that there was 20% yield on UST.
Yeah, right.
The whole like marketing system behind it was not like, this is a stable coin, we have very deep liquidity, you can do all these things with it, it's being adopted by on this project. It was, hey, do you want 20% yield on dollars? By the way, you have to hold this stable coin, right? So, unfortunately,
hey, you want to loop it in the degen box? You want to get 70% on your dollars?
Yeah, just keep looping, man.
Straight to the veins.
I don't know if you've seen that guy Avram.
Oh my god, yeah, Avram
Eisenberg. That guy is such a degen. He was shilling the strategy on Ren, where he was like, dude, I need to borrow $85 million of Ren tokens, and like I can get XYZ yield. And everyone was like, dude, there's 3 million Ren on Aave. How are you gonna do that? Just loop it, dude. Just keep looping it. Come on. Like, this is the guy who was good enough to take down Mango Markets, and he's just like, yeah, just add lever. Although I don't know,
just lever up.
Bag from that. Yeah, just keep levering up, dude. That was the Terra problem, right? Like, that's not present on Frax. Like, Frax is not, the yield is not the product. Like the stablecoin with deep liquidity, productive AMOs, and like a whole range of other features like FPIS and FrxETH and FrxLend and Fraxswap and everything else is the product, and that's what it's attracting to the liquidity and the activity.
Yeah.
You can't sell yield, and that was Terra's problem.
You can't sell it forever. I think like what Frax did so right was at first they recognized Curve as the shelling point for stablecoins, and like what's the first use case was like, hey, like in order to have a stablecoin, we need to have deep liquidity. So in case someone wants to make a $500 million trade, which you do we don't
100 million.
100 million. You always like measure like, okay, like what is like the swap rate, and like it's always like virtually nothing, like virtually no slippage. Like Curve was like the first use case. They dominated and won the Curve wars. Now they're in the protocol, and now they build out this whole financial system with Fraxswap and FraxLend. Like I call it like they basically built like a
Fraxverse, basically
a Fraxverse, like a Frax stack for DAOs to do monetary policy at large scales. Whether it's like set up their own lending markets on FraxLend in isolated pools, or trade in size with the TWAM on Fraxswap, and now like I think FraxETH is going to be like the spark that makes the DeFi Trinity and the Flywheel really go around, because like now they have this whole financial system to support FrxETH. Like, what if I want to like take out a loan and have it be paid back in yield, and so I'm not at the mercy of variable rates? Like, there's so much to do, and I feel like the more I talk about it, the more like Frax is like that much further ahead than everyone.
Oh yeah, and what's exciting too is that you've got like, we're getting to a point where there's enough liquidity in stablecoins and enough trading volume every day, and there certainly will be enough trading volume in like ETH derivatives as well, that like you can build stuff on top of the yield, right? And that's like a sustainable thing, because like what the volumes of stablecoins are going to be. I guess presumably people can stop trading stable altogether, and so the stablecoin yield can largely evaporate, but like it's pretty robust, right? And then on ETH, like Ethereum will continue to make blocks, continue to have monetary policy, and so what the yield is roughly going to be. You can't know it exactly, but you know like kind of the range. It's always going to be between probably 4 and 10% for most people. So there's so much you can do on top of that as well, that we now have the size. Like our size is now size. So now we can like
our size is now
get
size.
built on top of it.
Yeah. I remember when we were in Paris, we talked about creative AMO strategies, and basically what your idea was is, hey, like in the future, let's have strategists come in, build their own AMOs, and if they don't reach like a certain, like basically now like with each staking, there's like a baseline yield, and like if they don't like perform better than ETH, you can just like retire the AMO and just put it back into FrxETH. Like, could you explain like your idea of that a little bit further?
Yeah, I mean, basically, the sort of, if you're not outperforming ETH's rate on any given day, then like there's no point in putting money into that AMO, right? Like you're not generating any excess yield. There's no alpha. So if you could have an automated system that maybe like opens up the sort of universe of people who are allowed to have AMOs, where if you had like kill switches calibrated to the right extent, that you could say, look, you can be running this strategy. It may not be profitable forever, but as it stops being profitable, it's getting, the money's getting rotated back into like FrxETH and being staked. The problem with it, I guess, is that there can be a 1 minute period of time that blows up a strategy really quickly. So it's not necessarily like this. Like, I think the way that I would need to think about more is like, how do you actually keep it safe? Right. Because the idea is that you need to be able to like lose some money so that the system can say, okay, you're losing money, your yield is going down, like we're taking the money back. But you can't have it like just get liquidated, right? Like it can't be like I'm going to go like do the Avram Eisenberg loop strategy on Ren BTC on Aave, and then after my 17th wash through the lending protocol, like just get insta liquidated because my margin is tiny, and have all the money just go away, right? Like that's kind of the tough part, but I think ultimately like that as a baseline, and not just for Frax AMOs, but for everything, right? It's like, well, what's the point of me engaging in this like higher fee activity where there's probably somebody extracting value and I'm paying the network and doing all this, right? And this risk, if I can just go to ETH and like sit on my ETH there and collect 5.5%.
Yeah.
Right. It makes kind of the risk-free rate like that much higher to overcome.
Yeah,
right?
It's like a higher bar. Like we all have to reach.
And it's only going to keep getting higher. Like, I would expect ETH yield to go up over time. Right? Like right now with ETH yield at like 5.5%, 6%, assuming that you're not running MEV boost, by the way. So like if I had just like a vanilla validator with 32 ETH on it, 5.5%, right? A little bit higher if I can like tweak things and use MEV boost, maybe like 8% with MEV boost. But that's in a world where like the like average fee, like average gas cost right now is like 8 GWay, right? So like we're at ridiculous, like ETH is basically free to transact. That's awesome.
Yeah.
But that's not how it's going to be forever, right? Like there's not a lot of significant changes to ETH that are going to make it be not the case that fees will continue to go back up at times of high activity.
It's funny to think about like once like the bull market hits again in a few years and like Guay's at like 3 digits, all like the ETH maxers will be like, look at like how deflationary ETH is, and it's like guys, like normal people can't trade on it.
Yeah, it's like that swap just cost me $1,000.
No,
but that's how it used to be. There used to be bots on Twitter that would snipe these transactions of like noobs swapping like 50,000 SHIB for ETH, and they're doing it. The total swap value is like $250. The fee was like $300. It's like, well, now you need this to like 5x for you to even make your money back, right? Like you spent so much money.
It's so funny. Like I think one of the most like interesting things was like I was working with this one artist and I was paying him, and he was like, "Oh, can you send me like it on Avalanche or BNB or Phantom?" And I was like, "Oh, I have like Frax on Optimism," and he was like, "What's Optimism?" He's literally said, "What's Optimism?" And like we talked about like
there wasn't.
No. This was when like No, this was like during the summer.
No, I meant literal optimism, like the adjective. Like there wasn't optimism for fees at that time.
But like it's amazing. Go ahead.
I had a job that paid me in Bitcoin in 2019, and what they would do is like when you get paid, the guy who paid me would send the transaction at like the min fee, like min sats per byte.
Oh my god!
So sometimes it would take like 5 days to confirm. It was like, I'm not paying fees. Like you get it when you get it. like most of the time the payments would come through in a day, but sometimes you have to wait like 3 or 4 days to get
it's like a bank
enough
conversions.
Yeah, it's the same exact thing. But yeah, like the fee environment will go back up. And the thing is, like right now, like your fee yield on Ethereum is like 1.5%. So like your inflation is like 4.5. Fee yield for normal people is like 1.5. And that's at like 10 GWay, right? So I think it's reasonable to expect at like a moderately adopted level, we'll see regular fees at like 40 GWay. That's not out of the question, right? And so at that point, and also I would also add here, blocks right now are not always full, right? So technically EIP 1559 targets like a 50% full block in terms of gas use, but blocks can just go above that, right? And every time they start to go above that, the base fee goes up, and then people start having to pay more on their priority fee. Blocks aren't really that full right now.
Real estate's cheap.
Real estate's cheap. Blocks are pretty empty. So when we see full blocks, GWay at, base fee at 35 GWay, people paying 10 to 50 GWay in priority fees, the average validator, their yield could go up to 15%, right? It's like, there's
without
so much
MEV
more.
boost. Yeah.
I would say, like on maybe, not for an entire year, but like at times, if you just were like sampling at different times, like because right now, like validators are making 6.5, right? Ish. And with MEV boost, they can make 9 to 12, right? Eventually, at a certain point, when you have really congested network conditions, some of them are going to be making like 15%. MEV boost validators might be making even more, right? Depending on how that proliferates. But that is a high bar. So there's a lot of like Ponzi yield that is just going to like go away because if ETH is busy, then, but it's kind of a weird cycle because like ETH is busy because of the Ponzi activities sometimes. And then like, so
if you get rid of Ponzi activity,
if everybody leaves and just stakes ETH on the beacon chain, then you have less fee activity. You know what I mean? It's a kind of a weird cycle, but like at the end of the day, I think it's going to really raise the bar for like productive yield. A lot of people are going to realize the only way that they can offer like long-term attractive products that are not just like inflation subsidy is going to be via basically just by like giving you revenue share, right?
Yeah.
Actually, Christian,
what do you think
I just want to ask about the validator because Christian here seems like an expert in the validator set. So is how well you run your validator a competitive moat compared to, I say, the way Lido runs it versus the way FrxETH runs it?
Not a ton. Well, yes and no. So like where your position in like network topology and like whether or not you're using relayer networks like BlocksRoute or something like that, that can boost your yield. You also need to have like a good computer, basically. So like I think it does affect it. Like if I'm running a validator on a Raspberry Pi versus running it on a nice, like fancy dedicated server with Ethernet plugged into it, that kind of thing in a data center. But the main thing that can happen is if you don't have, it's relatively cheap to run a validator in terms of like compute costs. You don't need a bunch of hardware. But if you're running it on really bad hardware and your computer's overheating and it's not keeping up, then what can end up happening is that you won't attest properly. And so like when you get the inflation that you get is actually down to two factors. It's when you propose blocks, you get a bigger reward. And when you attest to the validity of other blocks, you get a smaller reward. There's also other things that can reward you that are like less relevant, that happen less frequently. And then there's like penalties for not doing what you're supposed to do. But if your machine is not attesting frequently, you're losing money. And if your network is not stable all the time, you're losing money. So there is like some stuff you can do to make your validator better. But in reality, like the biggest difference is between people who run MEV boost and people who don't. So if you're using the client, like the ETH client that plugs into the block relay networks that are run by like private operators, then you're going to make more because those blocks have higher fee transactions for the most part. Or they select transactions to build blocks with a private mempool that have higher fees because these blocks, the transactions want to go in, get into the mempool quickly and, route somebody else. So that's the best thing you can do. And it is a pretty significant boost. It's like a few percentage points. So that's why most people are using it. And basically, like, the way that works, when you run an ETH validator today, you actually have two things going at the same time. So it's a little bit different than it was before with mining, where you basically had like your mining software that did like the hashing on your GPU and then like fed stuff back into Geth. Today you have like Geth running, but then you also have to have your beacon chain client. There's like 6 of them. There's like Teku and Lighthouse and Prism, a few others. So you run one of those, that syncs with the beacon chain, that keeps track of all the blocks and like where, what the longest chain is and all that. And then it has to take data back and forth from the execution layer, which is technically its own, not chain, but it's like its own environment, right? They're not really, they just communicate over this one sort of area. And then that is where like they're processing like, okay, what's in the flocks, what were the fees associated with each of these, and also like executing the transactions with like the state machine. So when you get income from a validator, you actually get it in 2 wallets. One of them is your beacon chain wallet that has everything from inflation. The other one is your fee wallet that has all your fees. You can withdraw your fee income today. You can't withdraw your inflation income until Shanghai. But what was the second? There was another part of that question. Besides
so I was wondering, is there a way for, say Lido or say for FrxETH to outcompete each other on the validator level? Or is it just...
No, I don't think so. I mean, ultimately it's like, do you have uptime? I would assume that Frax and Lido, as the example, both will have like professionals running the validators. And so professionals, I mean, there could be a flood in the building that has your servers or something, but ultimately like professionals will do like a similar quality of job for this kind of a thing. So there's not a lot of like differentiation space. And the nice thing about the way ETH works and why it's a little bit less dystopian of a PLS network than like other blockchains is that, and I didn't realize this for a long time. And so I was very bearish on like ETH, on the ETH merge for a long time. Like, oh, proof of work is this ideologically pure system. But in reality, the way that proof of stake works on Ethereum is actually not that bad. It's quite good, actually. And the reason is because there is something called the effective balance. So the effective balance of your validator is some number lower than 32 ETH. It can be between 16 and 32. Any ETH you have extra, so like the average balance of a validator is greater than 32 because all of them have earned rewards. So it's like 34 ETH. Right. But your effective balance is what's used to calculate your reward. So it only goes up to 32. It can go lower because you can get slashed and you can still propose blocks. But you can't join the validator set with less than 32 ETH, but you can still be in it with more than 16. And that's what's calculating your rewards, because basically the network calculates a base reward, and that's basically like your earnings multiple that goes on, and then they use that to calculate how much you get for testing, how much you get for proposing. And that caps out, can only get multiplied by up to 32. Like, so you don't really get any benefit from putting $50 billion of ETH onto a validator, right? Like your incentive is actually to horizontally scale and have as many validators as you can, which is better for the network than just piling money onto one. And it's also safer for you because if something happens and like the key gets compromised on one, well, you just have all your others, right? So that it's not as plutocratic as people think it is. In the case of ETH, that doesn't apply to every chain. Every chain is different, but like in ETH's case, like it's a pretty nice little feature that like prevents the accumulation of wealth and like a handful of stakers that just take over the network.
Yeah. I want to change the subject a bit, and I want to go to your article you wrote, Digital Phoenicians, which is a personal favorite of mine. And I think it aligns very well with with everyone talking about the network state and whatnot. So can you give like a little bit of a summary of your Digital Phoenicians paper? Like to me, it's like, people think of like people think in like, oh, like Roman Empire, they had all this territory, they were so Chad, blah, blah, blah. But at the end, it was the Phoenicians, and which became the Carthaginians, that had the vast trade networks at first, and they were actually the more Chad Empire, but we don't recognize them as much because they were just like lit to like solve the earth from Rome.
Yeah, exactly. So I guess like a bit of like the historical context is like the Phoenicians came from Lebanon, and then they colonized the whole Mediterranean basin, and eventually they were very good sailors, so they like moved around a lot. They sailed apparently all the way to like Cameroon at one point, which nobody would do that again for like till the 1500s. And this was like...
They sailed to Cameroon? I didn't know that.
It's like it's a subject of controversy, but there was an expedition that went out of Morocco, like somewhere in West Africa, but no one sailed there for like hundreds more years, thousands more years really until the Portuguese, right? So they made it pretty far. They had lots of colonies, but they operated in a more efficient way than the big empires that were around them, and they were able to like sustain themselves by just selling stuff to these empires all the time, whatever it might be: dye, cedar wood, tin, ivory, what have olive oil, whatever. So the comparison here is that like we live amongst like a bunch of degenerate, massive empires around the world, and they're very inefficient. They don't move quickly. But much like in the case of the Phoenicians as well, like they'll destroy themselves, right? Like we just have to sit here and be more efficient, solve problems when they arise, and provide cost savings and efficiency to the people around us. But if you really believe in crypto, I think that you're part of that belief system inherent in it is the idea that like the stuff around us will fail and like we shouldn't. And ideally that's like kind of a control failure. And I think it's more likely than not to happen at some point. Maybe our lifetimes, maybe not. But obviously when I say fail, I don't mean like nuclear war, right? Because like apocalypse is not going to be good for us. Yeah. We all depend on electricity. Crypto does not work without the internet, doesn't work without electrons and wires, right? Like that just can't happen. But I do think, on the other hand, that like books like The Sovereign Individual were pretty like accurate in saying that things like jurisdictional arbitrage will become really common, and that people will start sidestepping their state government a lot in the coming years, right? Like how many people have just like randomly to Lisbon? Why? Because it was like favorable tax policy, right? Like even people who like their country a lot are now thinking more in terms of like, what's best for me? Where can I live that's best for me? Not like, oh, I'm just rooted in this town that I've always lived in. And so like the Phoenicians were very efficient, right? They actually survived the Bronze Age collapse at a time when basically nobody else did. The Bronze Age collapse is like the worst event to ever happen in human history, basically, when like all of the major Near Eastern societies fell apart at the same time.
They literally lost writing. That's the equivalent of us losing the internet.
Yeah, they basically regressed by like 1,000+ years. And it actually also caused a lot of new languages to emerge because there were so many refugees just like wandering around that like came into contact with each other and didn't know how to communicate. It like prompted a lot. It's a whole rabbit hole. It's like really interesting, but a bit off topic. But anyways, many of the Phoenician states survived as a result. And they were able to do so because they were efficient, and they just like they had what they needed, and they did something very well, and they executed on it. And I think that's like a similar position to where we find ourselves today, where it's like we can just let the rest kind of fall apart. We don't need to go like wage a guerrilla war against the government, and we also don't need to like roll over and say, please regulate me.
Regulate me, Daddy.
Please, like, civil me and regulate me. But I think that there's an assumption inherent to a lot of people in this space that like stuff will just continue to deteriorate around us, and if it does so at the right rate, then we're positioned to kind of just take over.
So
and be
what does crypto do really well that it can take over? Is it coordination? Is it sending value? Like, what is it in your opinion?
Yeah, I think it's sending value, coordination, trustlessness. So like the ability to interact in a fully trustless manner. I think trustlessness translates to speed. Like, why do you want to interact trustlessly, right? I mean, one, it's safety. You don't have to trust anybody, which I find is like a weird concept to try to explain to older people.
Even the term trustless is like very weird. Wait, less trust? Like, isn't that a bad thing?
Yeah, well, it's that, but also like, you gotta remember, like we all grew up with like the internet as kind of just a fact of life, right? Like that, when you grow up like spending more time on the internet, you develop like bullshit radar really quickly, because otherwise you're gonna get scammed or
real
like
quick
hurt yourself or see something you don't want to see, right? So you learn how to like avoid stuff. And so by default, I think this applies mostly to people like under the age of 40, because even people who were like 40 years old, you know, born in like 1982, like would have had the early internet. And honestly, the early internet was worse than now, because there was no content moderation. So like, right, like you don't want to stumble onto a link and either get a virus on your computer and ruin it, or like see something awful, or accidentally access some kind of something illegal that might, get you in trouble with the authorities or something. You don't want that. So you develop like kind of a sense of being like, okay, this is bullshit. I'm not clicking that. And so you inherently don't trust things until you have a reason to trust them. But if you grew up in like the 1950s, you know, you knew everyone in your town, you went to like the friendly mom and pop shop and you talked to the people who work there, you know, nice life. Right. So like, they're like, yeah, I want that. I want to be able to trust people. We're like, no, I don't trust anybody because I don't know, like that person with like the anime PFP, that could be a Fed. That could be like somebody who wants to hurt me. That could be somebody who's just like bad and just has bad things and I don't want to see it. Right. Like there could be so many different possibilities. And you just inherently don't trust people. So it takes time to build trust regardless. Right. And more people aren't like born into a trustful context anymore because a lot of people don't live with the same community that like 6 generations of their family did anymore. We live in big cities, right? I think we're all probably in a multi-million person city right now. So it doesn't work like that anymore. And so having trustless interaction means that you can interact more quickly. And that's a big efficiency boost, right? So like we do that well. We do value sending really well. We do like enforceable public rules really well. Automation getting better at, I think. So there's so many different things that like we just have the better solution. Economy of scale as well, like networks. All of that enables you to have economies of scale. Things will be cheaper.
I really like what you said of we don't have to fight. We can just literally wait it out because we do have the better system. Let time take its course. And eventually, you know, as I said at the beginning of the episode, like what will it take for the world to go on chain? Like this is how it happens. This is like a big part of how it happens. It's just being a better system overall.
And the question is, do you want to like permission the better system and then like use it to allow the government or like the sort of status quo to sustain itself over time? Or do we want to just sit there and say like, okay, you guys are going to implode on yourself at some point. We don't need to really do anything about that. But when you do, we will replace you, right? It's like replacement versus bolstering. It's kind of like the argument now, it seems like. And some people want to say, look, we want to permission this. We want to get the institutions in here. We want to like have them plug in, but that's like short-term monetary gain. But like over the long term, I don't think you want to like, use this as sustainability tech for somebody else in their system, right? Like we should hopefully someday kind of strap. But that's very utopian, and you know we're all still benefactors of like the current status quo in one way or another,
especially as Americans.
Yeah, exactly. And I get paid in USD. You know, I pay my rent in USD. It's hard to really. It's like it's easy to make sweeping statements about like, oh, the government should just blow up or something, but in reality, like there are certain things that we
that would ruin a lot. That would be very very bad. Like people are like the post-dollar world. I'm just like, guys, we live in an ocean of dollars. Like I don't think people realize like how extreme that is. I mean, it's very idealist to talk about it, and like I think there's a recognition that this dollar system, or like more the way like the Fed is acting, is like can't last forever. And like we've seen it before in history. And so it's just like, what is the consequence of their actions that they're doing now?
Yeah. I also think like there's a lot of, and you know, we don't see this as much anymore, to be honest, but like doomsday preppers in crypto, there used to be a lot of doomsday crypto.
That was a Bitcoin thing.
When, like, it was a big Bitcoin thing. Like they'd all move out to Wyoming and like live in a bunker and eat like raw meat. Like, that community, I don't know. I think they actually did like close the vault door, and that's why we don't hear from them anymore. They all went out there and just sealed themselves up.
Do you remember the BCash person that like rolled up in the tank in Virginia?
Yes. Oh my God, I totally forgot about them. Yes. There were so many psychos in that side of things.
Dude, we were around then. Like I don't think people realize how the ETH merge, like the proof of work fork, was so tame. It was such a nothing burger. Like the Bitcoin Cash fork was so violent. Like fucking Jameson Lop was getting swatted at his house and shit. Like people were really up in arms about the whole like that whole like USAF like that faction that came about. Which I actually got a history lesson from Eric Wall. Shout out to him in his talk, and he basically said like, Ethereum needs to have its own version of USAF, but it can be a lot more peaceful. It doesn't have to be like over all the validators. It can be like sniper shot at like a specific validator.
Yeah, that was a crazy time. That was like
nuts.
People who didn't live through the Bitcoin tax fork. Like that was the most insane episode. Like with the Hong Kong agreement and the New York agreement.
Right.
Broke the New York agreement, and then what was it? Jihan Wu was like, "Fuck your mother if you want fuck," and like, "Oh, I'm gonna turn off all my miners," and like I backdoored every ant miner, and like you can't like. And then, like the whole thing with ASIC boost and like that was insane.
It was crazy.
Like, we really did think it was gonna work for a bit. That was the thing. Like people look at BCash right now and they're like, "Oh, it's so dumb. Like, what a scam fork, right?" But like at that time,
it's a real threat.
It was
such a threat.
Yeah.
And I think BCash topped out at what, like 0.2 BTC or something at its like absolute height. So it never really got that close, but in the weeks following, like before the fork, oh my god, that was seriously scary.
That was my introduction in crypto. I was like, whoa, this is so exciting. Like, I think most people, like normal people, would have been like terrified, like, what the fuck is going on with these crazy people? Fuck this industry. But that's when I was like just getting into crypto. I'm like, whoa.
Oh, it's so enthralling though, because like it was such an interesting like multi-layer conflict, and then like, but yeah, that time was. The merge was nothing. Everyone was in agreement with the merge. But I think that's actually like a really key factor of proof of work systems that doesn't exist in proof of stake, for better or for worse, is that like in POS, all the actors are kind of aligned. In proof of work, you had two political parties, right? Like you have the miners who are net sellers and by sort of inherently like big blockers to a certain extent. And then you have like everybody else. And the everybody else are like, they don't want sell pressure, but the miners need sell pressure. And that like political discord is just like it led to that in the end, right? Where eventually, I guess like Roger Ver did have Jihan Wu stay behind him to the extent that he needed to, and then they had their own little civil war with BSV.
Satoshi's vision. Yeah, I think
that was really crazy.
Yeah, I think you're the one that talks about like proof of stake miners are a lot more aligned with the network than proof of work miners.
Yeah,
like,
that's a good thing, right? Because they don't have these like political meltdowns like they did with when you have diametrically opposed groups.
It's so much more of a robust system.
Completely different.
Yeah,
it's like ultimately conflict does not equal more decentralization in every context. Just because two people don't want the same thing doesn't mean that it's more decentralized.
It's crazy, like Roger Ver, Jihan Wu, Craig Wright, like this whole faction that came up, and like
Calvin Ayre too.
Him? Oh my god, yeah. And
he's
like,
still around.
I mean, I guess they're also around in some capacity, but they don't have like even like remotely the same influence. And like they had like their followers and stuff that like came in and like truly believed in like BCash and BSV.
They made a lot of people poor.
They made they made
a
an
lot
incredible
of
amount of like really poor. Like I don't think like people like I think like the biggest mistake people make is like, yeah, like I feel really excited about this. Like this must be the future. Like I'm going against the grain, and then they just get absolutely cucked. They just get financially ruined.
But Bitcoin Cash, like the important thing, that actually was a lesson in itself, because that was what told us, I think, once and for all, that like the value in Bitcoin is not innovating; it's being Lindy. Right. And if you're always forking and upgrading it, then you can't really achieve that. But people didn't agree with that back then. So it was like a valid thesis. But yeah, like Roger Ver and that crew really like screwed a bunch of people.
Yeah. And I think they
there were
screwed
people
themselves.
building serious apps too. Like, do you remember Twetch, the app?
I do remember Twetch.
No.
Yeah. Like that was a pretty legit project. It's like Twitter basically on BSV. It was like a semi-legit project. It worked. The founder like seemed like he kind of went like semi-crazy at one point.
What was his name? I forget.
Coinyeezy.
Coinyeezy,
the
Kermit
Frog guy.
I remember him. Yeah, because he was the one I had in mind of like somebody that got like financially ruined because
he got robbed. He lost a lot of money too. Dude, he has like a whole at some point. Dig through his Twitter. There's like an essay.
A whole
about,
thread.
Like, how fucked he got by that. Like him doubling down on that ecosystem. But Bitcoin Cash, you can spend in, I want to say St. Kitts and Nevis. I think the island in the Caribbean.
That's where
because Roger Ver moved there and like basically paid off the island to like accept BCH everywhere. So there's one country you can move to. I don't know if they're an
BCash,
independent
a sovereign nation.
I think they're in the Commonwealth, so they're not quite sovereign, but pretty close.
Yeah. Well, on that note, we're getting close to the end, so we can do the lightning round here.
Let's do it.
Yeah, let's do it. Kit, you go first.
All right. So Christian, we always can end the pod here with a series of quick questions. So just answer what came to your mind first. First question is, when did you first touch the chain? What was your virgin crypto experience? And sexes don't count.
I guess technically 2016 using IPFS. I don't know if that counts as a crypto experience, but that was like my initial rental.
Whoa, that's a completely different answer.
What was the first DeFi app you used?
Oh, shit. I think it was Yearn. I'm pretty sure it was.
Were you farming Yearn, or did you deposit in Yearn?
Deposit.
Yeah.
I think it was Yearn. There might have been a few before that, but like sometime in around like early 2020, Yearn Finance. When did it come out? Was it in the middle of the year?
July
or
2020.
Yeah, that might have been the first DeFi one. Yeah. If not that, then actually no. What's the? There used to be a project called Melon, or something like that. Melonport. This was like 2018.
Melonport. Yes, I remember that.
Yeah,
yes,
I used that one at one point. So I think that was the first one.
Right. That was like the investment one, right? Like.
Melonport? It was like it was like Vault Bay, I think.
Okay. Second question: what is your favorite off-chain activity? What is your favorite touch grass activity?
Oh, touch grass activity. Well, the travel's been fun, although I don't know how much that counts, but fencing as well.
Fencing?
I've been out of practice for a long time now, like for about a year, but I need to get back into it and miss it a lot.
Fencing.
Yeah.
Nice.
Cool. Okay, Dave, your turn.
I got a new question. What is your favorite on-chain memory? What is your favorite memory in like event on-chain?
Oh man, there's a lot of good ones. I guess the one that comes to mind right now was right after the Uni airdrop, like max leverage longing Uni token with an un-KYC'd FTX account, and then really just riding that for a while and getting liquidated on Cream like 2 weeks later. It was really great because they got hacked for like the millionth time. It was like, shit.
Yeah. Next question. What is some advice you'd give to yourself 5 years ago, if you could?
Like crypto specific or just
anything
in general?
In general.
I guess it would be like act on sort of theses more. I feel like sometimes I see something like, oh yeah, okay, and then like, nah, not enough conviction, don't do it, and then a year later you're like, oh, if only I had like actually put my money where my mouth is, literally. So.
Yeah.
Okay. And then last question for me: if you weren't in crypto, what other career path would you be on right now?
I have no idea, to be honest. I did try to get full-time jobs outside of crypto for a while, but nobody really wanted to hire me, so.
Their loss.
Yeah, exactly. So
fuck them.
So who knows? It probably would have been either like, I'd probably be like hitting my head on my desk right now, working in something like lower level TradFi, or maybe like software development.
You'd really be an NPC.
Not sure. I would literally be an actual NPC if it was crypto. So.
Yeah. And on that note,
thank God for crypto.
Thank God for crypto. Thank Satoshi. Thank Vitalik. Thank all the forefathers before them, and for creating this fun little world that we're in. NPC Christian, thank you for coming on. I feel like I've gotten a lot smarter this episode, so I appreciate that.
Yeah, thank you,
Thank you, brother.
Thanks, everyone, for listening to this episode of Flywheel Pod with NPC Christian. We went deep in all parts on-chain, and honestly, I'm just like super impressed by like how much Christian knows about such a vast array of subjects around crypto. Like he's really like a Renaissance man. Like, you know, if you need him to do validators, he like runs validators. If you want him to do like deep into like governance knowledge, like he knows about that. You know, like Kiet. So like, what do you like? Any final thoughts?
Like, dude, he may be a Zoomer, but he was able to be in the class of 2017 in crypto, so he kind of knows all of that history as well.
Yeah.
So he puts him in this like really, really interesting spot to kind of know everything that came before him, but also be so, you know, forward-minded and thinking as well too. So
I definitely have a brotherhood with anybody from the class of 2017 because like that. I mean, you were from that class. Like that's when we all came up, and like being able to like reminisce on like how crazy it was back then, and like people don't realize like what was going on. Like now it seems like so tame.
Right. And yes, I've totally forgot we talked about this, but bull market grift and bear market despair. And we don't have those noise right now, right? We're just focused on building right now. And this is the difference in this bear market relative to the one in 18.
Yeah. And I think like by next cycle, I'm like really excited to see what comes out of it. All, you know, the building that's happening right now in this bear. And on that note, don't forget to hit that bell button and subscribe to Flywheelpod. We hit 1K subscribers. Let's go. Don't forget to follow us on Twitter at Flywheelpod. Join our Telegram group at Flywheelpod. You can follow me on Twitter at DeFi Dave 22.
You can follow me at 0xcapital_K.
And as always, nothing here is financial advice or tax advice. This channel is strictly educational. Nothing here is investment advice or solicitation to buy or sell any assets or to make any financial decisions. This video is not tax advice. Please talk to your accountant or financial advisor. Please do your own research. And on that note, we'll see you next time.